Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Hello and welcome to the Colorado Real Estate Leaders Podcast. It's a great day in Colorado, and today we have with us Justin Borvansky, who's a loan officer with Edge Home Finance. Justin, welcome to the program.
Thanks for having me.
Hey, you're welcome. So I am excited to talk to you because it's always neat to get people's perspectives. And sometimes, it's really an interesting trail that brought you into the industry you're in. So what is your background and how did you initially get involved in the mortgage industry?
Well, I got my degree from Colorado State in restaurant resort management. I played football up there in the late 90s. Worked in the restaurant business for a while and then figured out that I didn't really like working holidays and weekends. And a friend of mine got into the mortgage business and I didn't know a thing about mortgage. So he was, learning and teaching me how to do everything, and just kind of sat down and started calling people and asking them about, their rates and how I could help them. And after, living through, the '08 downturn of the market, everything, it's just been a good career for me, and it's, provided a good lifestyle for my family. And I've helped a lot of people along the way, which has been nice. And it's, obviously one of people's largest purchases. So it's, usually there's a lot of thought that goes into it, take the jump into home buying.
Yeah, absolutely. So it's interesting. You've been through some of these good markets and bad markets. You mentioned the one back in '08. Where do you think the market is headed now? It's been changing a little bit.
I'm pretty optimistic about the market. I mean, obviously the interest rates are driving it because we had, in COVID in 2020, we had, all time, everybody says, oh, those are all time low rates. They truly were the all time low rates. And now from December until now, we've really gone in the other direction. We've gone up, 3% since December, and that's really been hard for people to swallow. But it's also opened up a lot of opportunity for people that were, there's a lot of folks that were getting outbid by cash offers or, people offering appraisal gaps, waiving inspections, things like that, where now those things aren't happening and it's going the other way, where folks are able to get, seller concessions and offer maybe lower than the list price and still get under contract and have more opportunity to have more inventory to look at.
So it sounds like you're saying there's a silver lining here potentially.
Yeah, definitely for the person that's, the first time buyer that's never been through the process. What happened in COVID, I, had several people that went out and looked at houses, and they got beat up from looking at 30 houses and not being able to get under contract, and now there's that opportunity has come back around. So it's more of a buyer's market than a seller's market, and we still aren't at full capacity for inventory. Denver's typically 15,000 houses is a normal market, and we're still running between 4,000 and 7,000 right now.
Justin, you mentioned about rates in 07, 08 range. I remember back in that time frame, the stock market just crashed and people were like, it's never going to get past 10,000 again. Well, now we're almost 3 times that, and so things change and,
right.
And it comes back. And so for the person that needs to buy a house, you go buy a house and pick the best house for you and pick the best rate and program for you. But trying to wait and time something, it's a whole different mindset than, hey, rates have dropped, should I refinance? But for home buyers, talk a little bit about why it's best just to go, if you need to buy right now for whatever your reason is, let's find the best program and the best rate for right this minute.
Right, exactly. I mean, you have to, if you're renting, you're probably paying, pretty high rent, because rents in Denver are real high. But, for somebody, you have to live somewhere. So yeah. You might as well, you know, make and find a place that works for you. And obviously there's budgeting that goes to it. You know, what I'd like to do is look at people's like credit and see how we can get their credit scores up and prepare them for the purchase when they're ready. You know, it may be a situation where maybe it's not 2 months from now, but it's a year from now. If we can fix credit or get them prepared, or, you know, the biggest thing that people run through is they're not educated. They hear a lot of things on the news or the internet about the market, and they go with what that, you know, I had a gal one time tell me that, oh, closing costs are $30,000, right? I'm like, no. Where did you hear that? Oh, the internet. Well, of course, you know, so it's just getting people educated on what the process looks like. And, you know, compared to 08 and now it's we're getting people closed in 10 days or less.
Wow.
Yeah, that's awesome. And you know, it's all relative. You know, like $30,000 in closing cost would be spectacular if you're buying a $10 million house. So I mean, it's, you know, who knows what on the internet
Right.
people saw, but it's like, let's talk to someone like yourself and go, well, hey, my friend told me that this program or this package or this type of loan is the best. Maybe it was for that person at that time, but boy, what is
Right.
your outlook? And are you going to live in the house forever and a day? Are you going to be there 1 year and you're out? So that would mean that different recommendations from you of the loan program would be needed, right?
Oh, absolutely. I mean, is it, you know, there's a lot of people that move around every couple of years with jobs or family situations change. You know, I've had a lot of folks that get into their first house and then they have 1 or 2 kids, and then the conversation comes up, well, is this house big enough? Does it fit our needs? What are the schools? You know, when you move in and you're single, you don't think about like, what's that school look like? But when you get married and have a kid, you're wondering what the school's like and the rating of the school. And that might change, you know, someone's outlook of where they want to be in town, you know, so those little things come into play, you know, when you're in the house a couple of years. And you know, the problem we had in COVID was that nobody felt like they could move.
Yep.
And now people feel like they can move, but they're scared because of the rate. Well, there's a lot of people talking right now with, you know, love the house, date the rate, because there's probably going to be a refinance opportunity at some point in the next 2 to 3 years where, you know, you might have a higher rate now, but you're going to have the ability to refinance that rate.
Yeah, that's a good point. Is, you know, you look at what's in front of you and make the best decision right there, because anything could happen. You know, rates could go through the roof in the next 2 months, and you're happy with the rates you've got now. So you can only make a decision based on what facts you have right now. So what, you know, you talk about home buyers, people looking to buy. What about, do you work with investors? Do you work with people looking to fix up their home for like home improvement type loans?
Yeah, we have some renovation loans that I've done a lot of renovations with. You know, the thing that people don't understand is that with a renovation loan, you can actually go off of the renovation after value. So the appraiser actually gets what you're going to do to the house and appraises the home like it's renovated already.
Wow.
And you get to go off of the loan to value off of that amount instead of, okay, my house is worth 500 and I can only borrow so much on it now. The house could be worth 700 if you did renovation. So you get to borrow on the future value, which makes a big difference for people because they can take that money. And, you know, some of these older homes in Denver really need a lot of love. You can redo kitchens, you can redo bathrooms, and put you know, everything costs a lot more, obviously. So it might take, you know, a couple $100,000 to turn a $400,000 house into a $700,000 house. But that after renovation is the key to that whole thing. Using that value for your calculations rather than using what the house is worth now.
Is that common? Because I would have thought that that's really risky for a lender to say, let's hope that it improves the value up to whatever, but that seems really creative.
Well, you're looking at an older house, and you're looking at what is the house. I mean, obviously the appraiser is going to look at the comparables
Yeah.
that have been renovated, in similar square footage if they have new kitchens. Like I live in Corey Merrill, and every time I go on a walk with my wife, there's 3 or 4 houses that go down that are being, fully new construction is going up. But it might just be a situation where, you're going to redo the kitchen or you're going to redo the bathrooms and maybe add on to the house. If you add on square footage, obviously you're going to be compared to a different house in the neighborhood that has similar square footage. So that's what's nice, is that renovation allows you to do that. And most loans don't allow you to do that.
Yes.
Yeah.
Yeah, that's almost like a construction loan, which is really complicated. So that's a really neat type of a program.
Absolutely.
So talk a little bit about what people should expect or be prepared for. Like, how can they make the process as smooth and successful as possible when working with you on getting the loan?
Well, I mean, it's being prepared. I mean, I'm going to ask them simple questions. I mean, it kind of, you look at it like going to the doctor. You're going to put in your form, the loan application that's going to give me the idea of what's going on with your financial situation. And then most likely I'm going to ask for, 2 W-2s, 2 pay stubs, 2 months of bank statements. Where's your down payment coming from? What does your credit look like? If the credit's, perfect credit in the mortgage world is typically a middle score of 760. If you're not a 760, is there an opportunity for you to get to 760 if we maybe reposition some debt or pay off some debt? And what's nice is we have a simulator in the background when we pull someone's credit that we can actually run that scenario and see if we can get the credit score, if it's a 699 to a 720. I just had a guy that was in the process, he was a 692, and I told him, if you can pay off a couple of these debts, which for him, he used the credit card every month for his business. So he paid it off. It's just the timing of when the credit report was pulled.
Right.
It allowed him to get to a 741.
Wow.
In less than 3 weeks, which allowed him to have a better interest rate. There was a low down payment, so the mortgage had mortgage insurance on it. So it affects the mortgage insurance as well. So it saved him at least a couple $100 a month just by having that advice. And I feel like sometimes people don't get that advice from some of the loan officers out there, where, you have call center guys in maybe Detroit or New Jersey that are just, working through the deal and, oh, hey, let's get this done as soon as possible. Let's not worry about that, that kind of thing. So it's just a different, I like to put people in a better situation and see if we can find them a way to, obviously they're going to be paying this mortgage. Why not try to get them the best deal they can possibly get?
Yeah, for sure. That's really, that's a huge point, is that did nothing to benefit you at all whatsoever. You were going to do the loan for them, but giving that extra advice benefited them. And then that provided such higher value. And that's the kind of thing that when you do right by people, that word gets around. People appreciate it. They feel valued, and they refer you because it's like, wow, that's not the norm. And we know it's not the norm. And boy, if Justin's going to treat me like that, then he'll probably treat my friend that way as well.
Yeah, I mean, I have a closing Friday that's a referral from a guy I've done a couple loans for. He referred to a young friend of his that's got a new family. He didn't know a thing about mortgages. Got him educated. He went out. He's in Greeley. Looked at a few houses. Found something that worked for him. We ran the numbers a couple times, and he's super excited. It's his first house. He's never owned before. His brother's going to move in with him. There's a space for him at the house. So it's changed his whole outlook on everything. And, he's not 40 years old. He's 24 years old. So,
wow.
I mean, there's an opportunity for guys that are out there working hard to own a home.
Just out of curiosity, did the brothers go on and borrow together where you had 2 incomes, or is that an opportunity to help, make sure the loan gets approved?
He didn't actually they were talking about going in on it together, but I actually didn't need his brother to be on the loan to make it work.
Nice.
So, but I've had lots of situations like that where, young guys out of college who, I mean, look at the rent downtown. It's $2,500 for a 2-bedroom apartment, where those guys, are making decent income together, and you combine that income and you get to blend it, and then you get to buy a nicer house, and then they live in it a few years. Obviously, some of these guys have made, with the way the values have gone up, they've made a couple $100,000. They go off and get married, and then they, it's just a wealth building avenue for the future. I mean, and they did it as young guys, so it's really helped them out to kind of launch them into their next property and have the money for a bigger down payment, or, and obviously it builds their credit along the way too.
Yeah, that's huge. Yeah, those are interesting points, but not overly creative, where it's like, you know what, that should be obvious to some other lenders. But like you said, if they're in the call center, or they're just, punching the clock, working for some lender, they don't take that personal, in-depth approach. And I think that's what sets people like you apart.
Yeah, I think on that front, like, me and my team are with the client the whole way. Like, I talk to the client at the beginning, and I talk to them in the middle, and I talk to the real estate agents during the process to let them know, because everybody wants to know, where are we at in, when's the appraisal order? Do you have the title? Is the loan into underwriting? I mean, if we can not educate, but like communicate with everyone in the process, everybody feels good about it. And then when we close the loan, everyone's, and it limits the questions that a real estate agent shouldn't have to ask or answer from their client. Like, what are my costs to close? I handle all that stuff for the client, so they're able to go into the closing with all the knowledge they need to know. And then the closing goes faster, and everybody feels great because they knew what they were getting into. There's no surprises.
That is a gift. When you are known as someone that can do that and be upfront communicating and have no surprises, once in a blue moon, it's going to happen. But if that is your way that you conduct business, that is just so huge. And too many people in any industry don't take that approach. And that's really spectacular.
Well, Denver is still a small town. Like, you can't do people wrong and not think that it's not going to get down the street. So I've always made it a point to really protect my reputation and make sure that the client's educated. And some loans are harder than others, and some are easy and get done super fast. But, there's not anyone that I'm going to say no to. I want to help. I've had people where I pulled credit every 3 months for a year to see if the credit score got up, and eventually turn those people into buyers. And, now those people come back to me because they know that, hey, I helped them out along the way, and why would I go somewhere else if the guy's going to, put an extra effort into helping me? Yeah, that's exactly.
Yeah, as big as a town can be, your word of mouth travels even faster. So I think that is a huge point to bring up for sure. Well, I tell you, there's so many things that people don't understand about the mortgage lending process. You've touched on many, and I think that, you tend to live in a house for several years, and you go through the process, and about the time you need to go through it again, it's not your business. You don't remember every step of the way. So having that steady hand and that guide, like yourself, to guide people through the process is just invaluable. So Justin, thank you for coming on today. It was a real pleasure talking with you. What's the best way someone can learn more about your company and then reach out and connect with you?
Probably the fastest way. I have one phone number, and it's 303-919-4288. And I have, my email is just justin@edgehomefinance.com. And, those are the best ways to get a hold of me. And if anybody has any questions about anything, I mean, I work with a lot of financial advisors and realtors, and I have partners that help, with insurance or investments and things like that. So, I mean, I try to make myself a resource to, beyond the mortgage, for other things like that. So if you have any questions on that, that'd be something I can handle as well.
Excellent. Well, thank you so much for coming on today. It was a real pleasure talking with you.
Thank you. You guys have a great day.
Take care.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.